Welcome to the Trading Lounge, and here we're looking at the S&P 500 on a 2-hour chart just to fit that five-wave structure that we've been tracking into the frame here. We've had a strong move in the markets overnight, partly because the Feds released their minutes to their next meeting a little bit earlier, and it sort of got out. So obviously the bankers have got hold of it. Anyway, it doesn't really sort of alter much. It's just that we've got a bit more of an extension into this wave structure here. So we're still looking for the top of wave 1 here. We've got our 5 little wave structure moving up through here, and we're looking for 5 waves in this little structure here. That's not quite finished yet, so but once it is, we can look at that in a moment. But once that's finished there, 5 waves to make wave 1, just above the 1590 here, then we should see an A and a B and a C wave from that point, and as a wave 2, and then further upside from that point there. If we drill into this little wave structure in here on a 10-minute chart, you'll see that from this low here, we've got little 5 waves up through here to make wave 1, back for wave 2. This is all the third wave up here. This is wave 4. So we should see wave 5 push up through above the 1590 into 1593 perhaps, and then a correction from that point there. The US markets are exactly the same as well. The S&P 500 was up, obviously not closed yet, but it's up higher than the Dow Jones. Dow Jones is up nearly 1%, S&P's up nearly 1.2%, but the Nasdaq comp is up nearly 2%, so a slightly different range on things there. The European markets have caught up somewhat. Here's the DAX here, as mentioned in the report yesterday, to be long on the retest of 77.20 there. This has also got further to move up as well. There will be another little push higher through here, then an A and a B and a C across here. Longer term traders can hold long at that point there and look for further upside there. Once that high comes in here, the probably failing to find support on the 78.30. Might even reach the 78.50 and then fall back from that point there. So intraday traders will have to navigate the sub-levels in that case. The UK market's pretty much the same as well. So with the UK markets, we're looking for tested support on 6300, then scaling in through group 1. In this case here, it appears we've got the top of a third wave coming into play here. So we've got one, well, wave 1 to here, wave 2 to here, and we've got this third wave still unfolding here. So it should go into the expected classic trading levels top in through here. That would be the arrival at 6400, the reaction, support, the first high above the level, then a correction through here, and then another little push up here to make wave 5 here of wave 1 and wave 2. So basically we're looking for a corrective pattern within this range here, group 2 here and group 1 up through here. So it's going to spend some time up through here, but once that's complete, then we should see it move further to the upside. Because this larger pattern here is corrective, it's in 3 waves, so eventually we should see new highs above here. So we're looking for a 5-wave structure going further up through there. So, you know, if you trade less, you can handle more risk that way and be able to stay in the trend that way. The Australian market's sort of the same really. You know, we were looking yesterday for a 5-wave structure up into the 5,000 area through here, and as you can see, that 5-wave structure is there. There's once it opens today, there'll be a little bit more high here that will probably come into the subgroup 1, which is basically 10, 20 and 30. The market should get held within this space here. The banks can push up today. The resources will be correcting somewhat. as the US dollar rallies, which we'll be looking at now. So look, but even in this case here, I've put wave 2 here. This A, B, and C, that's got to be shifted over a little bit. We haven't got to the top of this little structure just yet, but it's not that, we're not that far off it through here, so we can look within group 1 here for that to be the case. Yeah, so it'll push up here, then an A and a B and a C across here, then support, and then further up in line with the S&P 500. Alrighty, let's have a look at the commodities. Okay, starting with copper, as it's quite central to the base metals, and so what we're looking at here is we've got our little 5-wave structure up here for wave 1, wave 2, and then we've been looking for this to move to the upside through here, which it is. But what I want to point out here is that there's a beginning and a middle and an end to all patterns and trends or corrections of different degrees. And we've had the beginning here. We've had the the sort of the center of the trend here. So this rest of it through here is going to be a bit sluggish. So what we've seen in resources is not what we're going to get. But as this does push up through here, we will it will keep the sentiment buoyant in the resource sector. Just have a look at BHP in. Yeah, so that's BHP last night in New York, so a little bit sluggish here. This also to here, we feel that this move up through here is just a corrective rally, because we're expecting a bounce when we came down into this area through here into 65. So we could end up with a larger sort of triangle pattern here. We'll either end up with an A, B, and C here, and then moving further down, or we'll end up with some sort of triangle pattern as such through here. So we'll end up with something sort of diminishing into this situation, then dropping down from that point there. So one way or another, I just feel this is more of a corrective pattern in the process of further downside here. So we need to be careful. Where the banks are a little bit different, if I can just use one of the banks for an example here, this is Morgan's, JP Morgan's here, but most of them are the same in this thing. So basically we've been looking for this trend up through here, and we've been looking for a pullback in the banks, and that sort of coming together. So our local banks are just finding support now, and just starting to move up a little bit now. That didn't move up much yesterday, but point being is that they can make a new high above this point here, where the resources are just in a bit of a rally. So, and it is the banks that have been leading to the upside as well. So even though the resources look a bit more positive as such, I'd just be a little bit sort of careful about that. The gold market as well. We were looking at 5 waves moving up, and we were also looking for an ABC pullback rally back to 61.8, and it has gone over that somewhat, but we'll just stay with that for the time being there. As such, that's the 61.8 through here, so it's not like overly done. Let's just allow this to play out here before we make any sort of decisions. Any long trades through here would need 1572 as support. That would be the safest bet, a little bit like this one here. Do you know what I mean? So, but you could glean a position if the 1565 became the support. You could probably glean a small position in there, and then look to add on top of the 1572 if that's the case there. If the market, for whatever reasons, finds the midpoint here, the 1550 here, as the retested resistance, then the bias is to the downside. However, we need to be careful, because if this does get locked under here and comes down through here, then it's going to bounce off here, or definitely off the 30. So we would be looking for if that was the case, then we'd be looking for We'd be looking for an A and a B and a C coming back up here, retesting that, and then looking for a 5-wave structure to the downside. So this would be the shorting area up here. So just because it's locked under here, be very careful in chasing it from that point there. But as it stands, we will treat this as a B wave. There's a guideline in alternation. You know, if wave 2 is simple, then wave 4 is normally complex. That's the same within corrections as well. So if this wave A here is simple, then wave B can be complex, or it can be more simple. So it's either one or the other all the time. So it's always alternating. So never getting the, it's like wave 2 was complicated here, but simple here. So it's just the way that it works. So yeah, it's always just something to look at. The silver market has probably got the same. It's a bit more like the copper market as such as well. So it does appear that we've got this 5-wave structure up through here, but with gold and silver as well, is that we're not sure if we're calling this a wave A up here or wave 1, because in the bigger picture, even when we look at gold, if we go back to gold for a moment and have a look at the bigger picture here, what we felt here is that this structure, let's go over this, the wave 1, the wave 2, the wave 3, the wave 4, and the wave 5 coming down through here, and in wave 5 the 1, the 2, the 3, the A, the B and the C for wave 4 here, and then we need wave 5 to come down, and wave 5 was down for 1, back for 2, down for 3, and we're looking for back for 4 here, and then wave 5 was down through to here. So, but if this is 5, you know, we're looking for a low here after 5 waves, we'll get a larger correction back up through here. So we figured, well, that's retraced quite high up here, and it is in 5 waves, so we could have a low in here, but it would really need to, you know, overlap wave 1 in here properly to do that. But we got 5 waves here, so we, in one way or another, we'll get it can be wave 1 or an A wave, but because we've got 5 here, that means we should get 3 here and another 5 up to here. So if we get 5 that moves way back up to here onto the 1600, then we've got a low in place here. But we just need to be a little bit careful what we do and say in here, or what we do rather more than what we say in here. So we can have an A and a B and a C wave into here, and then rolling over for one more low into here. Okay. The other side is that this is wave 1 up here. We get wave 2 to come back, and wave 3 will push up above the 1600. If that's the case, we can go long from there, and we can hold long for a longer term. Look, it's just a little bit sort of tricky in here. Silver's the same as well. Yeah. Alrighty. The oil market is pretty much on sort of track, following the S&P 500 higher. We're looking for the 95 area here to become the resistance. We know that there'll be resistance in this block here, and that's starting to show up through there. But we just need this to play out through here. Once that's complete, we should see that roll over to the downside as well. Now that will become weak at the moment very shortly, as the S&P 500 and the Dow Jones have their corrections unfolding very shortly. All right, let's have a look at Forex, as the US dollar is the undercurrent sort of driver of these commodities. Okay, the US dollar here is pretty much on track. We're looking for an A wave down to here, B wave back up into 3, and a C wave down here in 5 waves. C waves always in 5 waves. So the 1, the 2, the 3, the 4, and the 5. So we're looking for the B wave up, which should be in 3 waves. So we'll look at something like an A and a B and a C. The B wave normally retraces 61.8%, say 50%, 60% of the A wave here. So we'll be looking somewhere up into the 83 here. Let's just see how that goes. So let's this is just the 4-hour chart. You can break this down into a smaller degree and look at this in terms of 5 waves up, 3 waves back, and then another 5 waves up. to get the exact point there. The other point for this, however, is that while this is pushing up through here, then the resources are going to be weaker, and also the euro will be doing the mirror opposite. And on the 30-minute chart here, yesterday we were looking at this coming up into the 131 area through here, and the wave count that we've got up through here, coming up through here, can be counted in different ways from this low here. But once again, you can kind of see that it's more like an ending. It starts off. You can just sort of see it. It starts off strong here, doesn't it? And then it gets this leg smaller. Then all these legs are getting smaller here. So you can see that it starts to creep. So you know that the steam is running out, so to speak. So what we're looking at, we're considering this the wave A, or it could be wave 1 too, but it's more likely to be wave A. But the main point here is that we've got basically 5 waves down through here, okay? So that being the case, we would be looking for a B wave back. That's the same as the US dollar moving to the upside. In this case, we've got this A wave forming, probably complete, or it could be one more leg down low. I'll just check on that. Bear with me. No, that's done. That's it. So just looking at this here, so we've got down for wave 1, the ABC for the 2. We've got the wave 3 here. We've got the wave 4 in here. Let me just see this. And we've got 1, 2, 3, all the way across here for 4, and this is the 5th wave here. There'll be 5 waves in this little, so that fits quite nicely. So we've got the B wave moving up through here. There's plenty. All these blocks here will, that's where the most volume is turned over. So that's where the supply is going to be. That's where people have bought. So people that are holding loss here will want to sell when they get back to break even here, and so forth. And same with here again. But we should be looking for this 50-60% retracement level, but always working to the closest largest number. So we know that all these levels are going to be hard hit. So the 80 here, this sort of area up through here is in the thick of it, in these, just between these two levels here, because that low level there is really, that's a retested situation there. That's retested supply, failed and moved down. So the 50, so it can move back up into this area here. So an A and a B and a C. If we just remove that, whoops, I'll find my chart again. I think that the better long trade would be once this A, B, and C is finished here, and it may not be like this. This may move up even higher here and lower here still, whatever. But we'll see that pattern unfold. That C wave will have 5 waves in it. Should have some sort of equality to this particular structure here. Probably more of an angle actually. If it's sharper angle, then there's something wrong with it, because the A wave is normally sharper and the C wave is normally more of an angle, meaning that it's coming down slower, means less sellers and also buying coming into it as well. So the look and the feel of it's important, the personality. But once that's complete there, then it can move further to the upside. Now, this particular next leg that we're looking for up here, you just got to remember that this wave C up here will have some sort of a wave C will have some sort of equality to this wave A that we've got here. So this whole structure here, that's what we'll sort of be looking at, I guess, or even 61.8% of the length of this here. Our target was the 13150 to 132 there. So I think just sort of stay with that 132 there. The other thing that we need to be a little bit careful with as well is depending on things. Now the wave B here that we're looking at could be quite simple. It may be just a 5-3-5 structure. but it could double in size as well and get a bit uglier and all the rest of it. So we just need to be mindful of that. But let's just see how we go with this 5-3-5 structure, and then we'll look for support and then trade long from that point there. So just be a little bit careful in amongst all this here. The Australian market here, it's yeah, look, it's just on track. It's moving up nicely. So where this is the 105 here. What can I say? This is nearly complete up here. It's either complete now. There's another little push here. I think it is complete because from this wave 4 here, we've got the 1, the 2, the 3, the 4, and the 5 here. There could be one more little thing in here, but what I was mentioning this morning when I was writing this is that if in the group 1 here, the 10, 20, and 30, if the 20 becomes the retested resistance here, then you know that the larger correctional pattern is unfolding here. So we're kind of getting set up for a nice buying opportunity here, because what we'll be looking for next here would be from here we'll be looking for the A wave, the B wave, and the C wave, something like that, and then we'd be looking for the next move to the upside through here. So this will offer a nice trade from this point here. So let's hope that we get this. And obviously this is going to be in line with the sort of the S&P 500, really, isn't it? You know, and the ASX 200, and you know, the bank should sort of follow within this as well. So a nice trade starting to shape up through here. Yeah, so anyway, enough rambling about that. Right, that's it. So look, Thursday's got a habit of opening higher and closing lower, being the bear day in a bullish weekly cycle. I know that's a bit hard to sort of grasp when the US markets are up a good solid 1% and well over 1% for the S&P 500, and the Nasdaq is nearly sort of 2%. But just bear that in mind. Yeah, so. And also too the Australian market as well. You know, the ASX 200 is pretty much the same pattern as what we're looking at here. So we're seeing 5 waves up from its current lows, and we are expecting some type of correction to follow through here, and then another move up there. So that's the general gist of everything. So, you know, it's tempting to get in long on a strong US market like this, but we are looking for a corrective pattern and then further to the upside. So just requires a little bit of thought. Yeah. Alrighty. Well, good morning and good luck, and enjoy the day ahead.